While Wall Street surges to new highs, Russia's stock market is sinking. Since February, the MOEX index has fallen dramatically, wiping billions from company valuations and eroding investor confidence. This isn't a global downturn, this is a Russian downturn. On one side is the United States, driven by tech, profits and investment inflows. On the other, Russia is weighed down by sanctions, shrinking revenues, capital controls, and a war economy that is starting to fracture. So why is the US market still climbing, and why is Russia's crashing? What has changed? What is unravelling beneath the surface? And what does this tell us about the future of the Russian economy? Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian stock market, because the stock market is a really good barometer as to what's happening in your economy. If your stock market is mostly consisted of companies from your country, which it is in Russia, there's very few Russian companies that are listed overseas now. There were some before the war in Ukraine started, but they have now been delisted. So the Russian stock market tells us what's happening with the biggest companies in Russia that you can buy shares in. And if we have a look at what's been going on in the USA, the S&P 500, this is the index over the past 12 months. And you can see that year to date in 2025, the index is up by 15%. And over the last 12 months, it's up by 16.7%. In the last 5 years, it's up by 96%. And all time, it's up by 150%. So why didn't I put all of my money into the S&P 500 5 years ago? Well, it's easy with hindsight to say those sorts of things. But the reason why the US stock market is doing so well is because the US economy has done well over the past 12 months, and lots of companies have seen their share value, their share prices rise rapidly. And we're continuing to see this bull market going on, even though people are calling out the market at all times. We're seeing people saying the market can't continue like this. However, if interest rates keep going down in the USA, it's likely that the markets could carry on going up. So everything's going fine in the USA. And the reason why I wanted to talk about the S&P 500 first was to really give you some context as to what's happening in the global markets, because the USA is the largest economy. The S&P 500 is one of the most invested indices. So this tells us that over the last 12 months or so, things have been going well. If we now have a look at what's been happening with the MOEX, the Moscow Stock Exchange, you can see it's a very different story. We have got a significant downward trend here. Over the last month, it's down by 3.5%. Over the last 6 months, it's down by 18%. And year to date in 2025, it's down by 19.1%. And this isn't because the Moscow Stock Exchange has always been falling, because over the last 5 years, it's up by 15.7%. And on an all-time basis, it's up by 180%. So what is going on with the Moscow Stock Exchange? Why are share prices falling? Why are company valuations declining in Russia? Well, if you've been following the channel, I'm sure you can make a couple of educated guesses as to what's happening in Russia. But this is predominantly as a result of the sanctions against Russia, the impact that they are now having on Russian businesses. But it's not just about the sanctions. So let's go through some of the details as to why the markets in Russia are going down and what this tells us about the Russian economy. Well, the turning point for the market was February. Up until that point, things were going quite well. But since that time, tens of billions, hundreds of billions of dollars of value have been wiped off. And this is partly because investors are pulling back from the market. This isn't a global sell-off. We're not seeing investors all across the world pulling their money out of the markets. In fact, it's quite the opposite. The markets have been attracting investment, but not in Russia. And that's down to the fact that Russia is involved in the war in Ukraine, and overseas investors are no longer interested, and actually in some situations they can't invest because of the sanctions. Now, as I said, February was the turning point, and that was the point where we saw economic data starting to turn. So prior to that, we'd seen lots of talk about the Russian economy booming. We saw 4.3% growth in GDP in 2024, which was actually higher than the GDP growth in the USA. And there was a lot of talk about Russia had switched to being a wartime economy, and this was going to be very prosperous for the long-term future of Russia. However, that wartime spending has actually weakened the Russian economy because they've come at the expense of civilian companies. We've talked about this a lot, but the Kremlin is now pouring billions of dollars into companies that are helping with the war effort. They're making things, equipment for that to go over to Ukraine, might be clothing, might be guns and bullets and bombs, might be anything at all. But lots of companies have been pulled over into the defense sector. And that's been great from their point of view because they've got guaranteed revenue. So they've run around hiring as many people as they can, offering higher wages, which has pushed up wage growth and inflation in Russia, which is one of the problems in the economy right now. But on the other side of the coin, the civilian companies have been struggling because they've seen wages rising. They've seen lots of their staff walking out the door to go and work for these companies being sponsored by the Kremlin. And at the same time, they've seen their markets diminishing because the sanctions are reducing the number of countries that they can actually sell their products to. So the real companies in Russia, the ones that are making things that consumers buy, are really struggling right now. And the state sponsored companies are doing really well. But unfortunately, those state sponsored companies aren't making anything that are going to give them a long term return. They're not making products that will see long term value to their business. What they are making is things that are disposable, that are going over to Ukraine, that don't give you any return on investment. So this is a short term gain for long term pain. And that's what we're seeing in the stock markets. And confidence has started shifting downwards. And that's why the market started turning down in February, because we started to see weakness in the economy. The expected growth in GDP in 2025 is now 0.6%. That's what the IMF is forecasting for Russia for the full year, compared to 4.3% growth last year. And the 4.3% wasn't long-term growth. It was just a short-term boost that was provided by the sponsorship from the Kremlin. So that's why the stock markets are coming down, because the markets are always looking forward. When you look at a share price of a company, it's not based on what it's done in the past. It's based on whether or not that company is still growing, expanding, increasing its profits, whether it might pay out more dividends, whether the share price might go up, all of those different factors that traders put into the equation. And when you look at Russia at the moment, the long-term prospects are not good. And that's why the markets are going down versus the USA, where they're going up. But there are some other issues as well. So the sanctions have applied some genuine problems to Russian businesses. So they're struggling now in terms of who they can deal with. They're also struggling in terms of access to things like shipping, logistics, refining, insurance, finance. So lots of Russian businesses in the past may have considered raising bonds and selling them internationally, and maybe selling them into the US markets, because the US buys bonds from lots of different companies and countries. But unfortunately, because of the sanctions, they can no longer do that. So they've lost access to the global markets, which means they can't raise capital. And that means that they're not investing as much into their own businesses. And at the same time as that, borrowing costs in Russia have risen significantly. If you want to borrow money right now in Russia, you're going to have to pay over 20% to your bank every single year. Now, that's difficult to make that work. When you look at the numbers, you'd have to have a return on investment of something like 50% per year to be able to justify that. And that's pretty difficult to achieve, particularly at the moment in Russia, where they've got all of these other factors that are weighing them down. So what we've seen really is structural damage being inflicted on many of these Russian companies. And as a result of that, investors have decided to pull away from the market. So what we've got now is a market where there are very few foreign investors, in fact, not many. Maybe countries like China and Iran, partners of Russia, may consider investing into the country. However, one of the big question marks is what happens in the long term to overseas investments? And what we've seen since the start of the war in Ukraine is that Russia have seized assets that were previously owned by foreign entities. So they've nationalized lots of different businesses, which they believe is in the interests of the Russian state. But what it isn't in the interest of is international investors. So when you put money into Russia, you're running the risk of Russia suddenly deciding that they want to change the rules and take that company for their own benefit, to nationalize it. So you could lose all of your investments, even if the company is performing well and you think, well, actually, I've made some profit here. Suddenly, if that company gets seized by the state, then it's gone. All of your investment disappears. It's up in smoke. So that's another factor that's putting off foreign investors. So even if you're sitting in China, you might be thinking, I don't really want to invest in Russia because I don't like the political scenario and the risk that I'm running in terms of what happens to my money over the long term. So, what we've got now in Russia is a very thin market. So, there are not many buyers and sellers of the shares, and a thin market tends to fall faster because there's not a full market approach. You don't have the wide breadth of investors that you have in places like the USA. So, that's another factor that's dragged down the Russian market over the past 12 months or so. So we've got an interesting situation at the moment where Russia is continuing to go down whilst the US is continuing to boom. And as I said at the beginning of this video, that's really telling us that the issue here isn't a global issue. This is isolated to Russia. And the big problem that Russia has is that it's going to be very difficult to turn this around because confidence is an important factor when you're looking at investors. Long-term investors particularly need to have confidence, firstly, in your political environment, and then secondly, in your economy. And I don't think there's any confidence in either of those at the moment for Russia. Overseas investors, even if they were allowed back into this market, if they were told, okay, everything's fine, the war's off, you can now invest back into Russia. When you look at what's happened over the past 3.5 years, I don't think many investors would be falling over themselves to put money into the market. And then when you look at what's happening to the Russian companies as well, because they're now undercapitalized, underinvested, they haven't been reinvesting into their processes and businesses and expanding over the last 3.5 years. They've been in decline. That doesn't make an attractive proposition for an investment. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about the impact of the sanctions on the Russian economy from a number of different angles over the past month or so. And we've seen lots of different problems starting to appear, particularly in the last few weeks. And the USA have recently ramped up the sanctions. They've told anybody that's dealing with Russian oil companies that they now run the risk of secondary sanctions because the two biggest entities, Rosneft and Lukoil, have now been hit with direct sanctions. So things have really started to heat up in terms of the application of these sanctions. But what we've seen in today's video is that this isn't a problem that's occurred overnight for Russia. The stock market in Russia has been falling since February of this year. So it's down over the last 9 months or so. And that compares with really strong growth in most markets around the world. So as I've said many times in this video, this isn't a global phenomenon. We're not seeing a stock market fall across the world. We're seeing a stock market fall in Russia. And the reason for that is multiple. Firstly, it's the long-term impact of the sanctions. So we're starting to see big companies in Russia that are listed on the stock market suffering in terms of loss of revenue, loss of profits. Therefore, they're not likely to pay any dividends. And the prospects looking forward, which is what the market always does, are looking negative. So when you look at it from that perspective, you would expect the share price of those companies to be going down. Added to that, you've got a lack of demand because overseas investors are not interested in Russia anymore. The sanctions are preventing many investors from buying shares in Russia even if they wanted to. But even countries that aren't using the sanctions and don't care about the sanctions would probably think twice about buying shares in Russia right now. Firstly, because they're going down in value. But secondly, I don't think the prospects for the Russian economy are encouraging investors anyway, even if the individual company was doing well. When you look at what's happening across the board in the Russian economy, it tells you that it's one to stay clear of. But also, when you look at what's happened over the past 3 years, where the Russian government has actually nationalized multiple different businesses, it seized ownership of those companies from their previous owners, many of whom were overseas companies. That doesn't encourage anybody to come into the market and start buying shares because you just don't know what might happen next. And when you look at the fact that the Russian economy is shrinking, it achieved growth of 4.3% in 2024. This year, it will be lucky to hit 0.6%. And as I said in a recent video, if things continue at the rate they are right now, there is a real possibility that Russia could see a contraction in 2025. If China and India stop buying oil tomorrow, which they are doing, we've heard already that the state oil companies in China have pulled back from buying from Russia, and India is worried about its trade with the USA. It's struggling with the 50% tariff that's been applied against all Indian exports. And it's now trying to recover the situation and have that extra 25% tariff removed by Donald Trump. One of the ways that India can do that is to stop buying Russian oil. So if that happens, we could see a huge fall in Russian revenue through the rest of 2025, which would mean that that 0.6% estimate by the IMF might look ambitious. So Russia might actually see its GDP going down. It could actually go into recession at some point in the next 6 to 12 months. And obviously, that's not going to encourage any investors to put money into the market. So the overall summary of today's video is that we have now got structural damage that's been caused to Russian businesses. We're seeing the stock market going down as a result of the fact that these businesses are struggling with regards to revenue and profits. They haven't been investing into their companies. They've not been expanding. They've not been buying new equipment. They don't have access to new technology to stay up with the cutting edge developments that are going on around the world. So Russian business is going backwards. Russian shares are falling, and all of this represents seriously bad news for the Russian economy for the rest of 2025 and into 2026. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. That's what I'm trying to do, provoke some thoughts. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and please subscribe if you haven't done so already. Thanks also to everyone that's supporting me. If you're a patron of mine, really appreciate that. If you're a YouTube member, thank you so much. And if you've bought me a coffee, sent me a YouTube super thanks, or signed up as a Buy Me a Coffee member, thank you for that support. Really means a lot to me. And here's something to put a smile on your face.